Hi, this is Z from Optionalitie. We're going to do a daily market update for September 12th, 2024. We're going to go through the major indices, the ES, NASDAQ, and the Dow, and we're going to actually take a look at some places less traveled. We're going to look at palladium, gold, IWM, which I initiated a very small but long-term kind of hold position, and also USD JPY. And lastly, we're going to go through a position review. So let's begin. So we're looking at the daily chart of SPY. So in the uptrend, we defended this trend line yesterday on huge volume. Today we actually got pretty good volume as well, better than these 2 days. So we're moving up on good volume, and we are well outside the expected move, which is rather typical for the beginning of a move. When this is basically when all the shorts here got squeezed, and they're having a point of recognition that, hey, we're within striking distance of all-time highs. Time to cover. So they're probably the ones that are still getting squeezed out of the market right now. I do want to look at the intraday chart a little bit on the ES. So if you look, the reason why I kind of didn't do much today is because as we're moving, I was expecting some kind of correction, and you see that we're getting a lot of overlap in the price action. So we have a little pullback here, but then the range on this move is just not like any of the ranges that are here. And you see that when price action looks like this, where it doesn't get any overlap whatsoever, this is a strong move. Whereas when you see price action like this, there's tons of overlap between highs and lows and highs and lows. So we're at the end of the move, and I am expecting a little bit of a pullback in the markets going into PAL next week. Probably retest some of the lows here, maybe some consolidation. We're probably going to retest at least this consolidation over here before making a move higher or lower. So I didn't want to initiate a long position on bad location, basically, when I know the market's about to kind of roll over just a little bit. So you have NASDAQ, which kind of the same thing. Now you'll see that we have a move here. So we have a trend here and a trend here, and now we're at the very end of this pattern. Now what's kind of nice is that if we don't ever get back inside this channel right here, that's basically extremely bullish, because all the people that are sold down here and a little bit in the session below this, this is what's propelling the move up top. And as long as these guys do not get acceptance back into their range, we know that we are bullish. So even if we do pull back a little bit, let's see some of the retracement levels that we can be pulling back to. If we kind of just maintain above 19,000 here, I think we're going to be in a good shape. And anything can happen, but yeah, that's kind of how I look at it. Here are all the wrong sellers that are making sure that we are, anytime we go anywhere down here, they're going to cover their short, and they're going to push the market back up. And that's how we know that there's more demand down here than there is supply up here. So we'll see what happens. We're still, like I said, I'm still expecting a rollover. Look, this is it's starting to get overlap a lot, and this top right here is not that much lower than this little drop right here. So yeah, we'll see how long it stays within this trend line. Now the Dow, remember we got kind of bottom ticked on the short right here. Well, we're probably gonna get, I would say, most of our money back on that position. Let's take a look at where it is right now. So we have this butterfly that's trading for 33. If this goes to like $50, 50 cents, we're gonna be able to get most of our money back, which is great. Now the market does need to pull back a little bit for that. So we'll see if it happens or not. I was tempted to take a little one contract off right here, but I'm gonna just stick with my read of the markets pulling back a little bit, same, which I think will happen to the Dow as well. So I think we're gonna consolidate right around here, around the 41,000 mark in the Dow. Now to the places less traveled, we have palladium. So palladium has been kind of in a downtrend ever since the inflation bubble kind of dissipated. and the Fed has been aggressively raising rates. But you know, we're kind of lower part of this range. We have tons of consolidation over here and support. And something that I shared on X is that this is a commitment of traders report. And what you want to focus on is the green. The greens are the non-commercials or large speculators. This is basically, you know, hedge funds that are trying to, you know, that are actually speculating on the price action, not like broker dealers that are just hedging their position. And you'll see that they've been kind of net short palladium for a really long time. So, you know, if I were short palladium and I see that we're starting to make potentially a higher high here, I'd be kind of scared. I put this out on X when it was about 95. It's moved up 1% since then. So I took a very small position here because look, this thing can really move. I mean, it moved like 15% in just a couple weeks. So I mean, you'll have to keep your stop probably somewhere around here. So, you know, make sure you manage your risk on these things. Commodities can move. The other kind of annoying thing is that this thing has a really bad market. It's 30 cents wide, and it has not that much volume. So, you know, I don't know if I think there's probably a futures contract that you can play here, but that's probably too big. So, you know, this is an ETF that's reasonable. In commodities land, so we have gold finally break out of this little a few weeks consolidation. So I mean, it's actually a really long consolidation here. So, and you see that now, you see that the range has really been kind of dropping off. We had good range here, and then it's just been kind of a slog going up. So, you know, maybe we're at the end of some long-term trend here. But, you know, the end of gold and other commodities do tend to extend quite a bit and have these like kind of blow off top, you know, at price action. So if you want to chase it, it's not bad. Actually, I think gold had really cheap options. It was down at like 14-15%. Let's actually take a quick look. So GLD, I remember looking at this yesterday and seeing that there was just extremely low IV yesterday for this. So let's go 2 days back. Oh, you can't see here. So this, let's just do 38 days out. This is $9, and now it's 36 days out. It's still it's moved up a little bit. So the implied volatility did go up just a little bit. So, but yeah, the calls and GLD was really cheap. I was actually really tempted to buy a couple, but you know, we could be sitting in that sideways range for a little while. And although you're not getting killed that much by theta if you buy like 30 or 60 days out, you know, you just don't know. This gap came on the PPI reading. So if you just take a look, this gap came right here at 530. So what are you gonna do? Options market's not open. So you can just take a position before and guess. Not my style. Next is IWM. So I've been mentioning this in a couple videos. I've said that IWM is basically holding on to dear life, which actually is pseudonym for a great buying op with a tight stop loss. So, you know, I took a position here. I didn't put anything in options. I think something would have been pretty reasonable is if we did this. 36 days out, we do like a 220 butterfly. Mostly because the implied volatility skew will help you a little bit. Some of these options are kind of expensive out here, so if you can sell some of that, that'd be kind of nice. But $1.50 for a $15 spread is not too bad, and it's at 220, which you can actually immediately start selling against 4 days out. You know, because I think that position had about 15 delta in it, so you can probably sell something that's like 12 delta and you get 20 cents back. That's 10%. You know, you can do that, like 1 expiration, 2 expirations, you get 20%, 30% back. And you know, you probably can get your risk down to a debit that you're willing to just kind of let fly. So there's probably potential here. The problem is I was running out of buying power in my account, so I didn't put it on. I needed a lot of stuff to come off tomorrow, and we'll just take a look at how the week ends. Once again, I think the market's going to pull back and give us a better opportunity to get into IWM. So let's take a look at the structure here. So yeah, it's kind of rolling over a little bit. Maybe it'll come back to like, you know, 210. I mean, it's been chopping around 210 since forever at this point. 210. It's been around 210 for a better like a couple years at this point. So we'll see. I mean, it's been underperforming. So if you're gonna go long, I mean, it's just the easier trade is just to go SPY, go QQQ. I mean, SPY is probably the best one. This is like you have the trend lines, you have the open channel to the upside. Like I don't know what more you want in a long position. You just start selling puts down here, buy calls. Pretty straightforward stuff. Really, lastly, we're gonna do the yen, which is what spooked a lot of investors a couple weeks back. But check it out, it's already breaking the lows from before, and yet the markets are all close to all-time highs. So not spooky enough. And maybe it'll spook some people in a couple days. You don't know, but yeah, we're probably gonna retest like 130, whatever. Okay, so let's take a look at the positions. We actually only have 2 positions on this kind of short that we've been trying to save ourselves from. I think we will. So we're going to try to get $200 back on that and take a $200 loss. This diagonal is actually expanding ever so slowly against us. I think it's right here. I have a lot of other junk on. Don't worry about that. But let's take a look. Yeah, so it's up to 52 cents now. I'm gonna start taking this thing off at like 60 cents. Maybe take one off before the weekend. Take a couple, like one off each day, and just like kind of harvest them as they come in. You know, but I like this position. I think that we're gonna get a little pullback. That little pullback is going to knock the stuffing out of these calls right here. But you know, these calls that we bought will have pretty good value in them because they still have to take into account Powell and anything that can happen there. So I'm trying to get one on, have a profit in the overall trade, and have one free ride to the upside. But overall, I mean, we've had a massive week this week. If you look at our positions, you know, this is closed, this is going to out worthless, so 100, 500, 600, I mean, a couple $1,000 gains. Sure, we took a loss here, no big deal. And you know, we're well positioned for Powell next week. So yeah. So I hope you enjoyed this content. Please like and subscribe. Leave a comment on what you want to see out of these market updates, and check out optionalitie.com, and I hope to see you in the next video. Goodbye.